Rising rates have led to tough times in the housing market. Both buyers and sellers stuck on the sidelines with the 30-year fixed north of 7% for the first time in 20 years. There are some exceptions to the rule, however. Alyssa Hellman is a broker for My Southern View. Alyssa, nice to see you. So the Wall Street Journal Emerging Markets Index lists Johnson City, Tennessee. I feel like I should sing it every time, thanks to Darius Rucker. That's number one on the list, ahead of Visalia, California, Elkhart, Indiana, Northport, Florida, Fort Wayne, Indiana, round out the top five, and your town, Raleigh, North Carolina, cracking the top 10. What do these cities have in common in terms of real estate markets?
Absolutely. So I think the biggest thing that you're seeing with rising rates is affordability has gone dramatically down. And so when you look at markets like Johnson City, like Raleigh, the one thing that a lot of those places have in common is you can still find affordable homes and compete in a way that a lot of these really competitive markets, such as San Francisco, Chicago, places where buyers were really priced out, they can still, with higher interest rates, compete and afford in some place like Johnson City or Raleigh.
Now, it's interesting because, Alyssa, we know a lot of people move to suburbs, they move to other areas for affordability reasons when they were able to work remotely because of the pandemic. But do you think that's going to be the case now as employers put more pressure on some workers to return to the office?
I do. I actually have seen 2021 and 2022, both were years where I saw a dramatic influx of relocation buyers coming to Raleigh, not unlike many of the other markets that you guys mentioned. But part of that was getting priced out in these bigger markets. Right now, when you look at interest rates, you're talking about the average 30-year fixed being 7%. That means that 85% of current homeowners have a lower rate. And so it doesn't make a lot of sense for those folks to move. So when you start looking at affordability, how can I afford my next place? Where do I want to be for 5-10 years? A lot of those other markets are really coming into play and coming into the conversation where folks are saying, maybe I want to be closer to family. Maybe I want to be somewhere else where my paycheck isn't stretched as thin as it is in other markets.
In particular, those first-time buyers who really been priced down, I think those are the ones you're finding in that top 10 list. So let's talk about the underlying issue here, which, of course, mortgage rates continue to get worse. If you can put in context what a mortgage rate means when it's north of 7% in terms of how much more an average monthly payment has gone up. And if I can tack on to that, how high do you expect rates to get in the next 6 months?
Yeah, so I'll answer the second part of that first, because I think it's the less scary answer, I guess. But my attitude is, I think we've probably seen interest rates peak. I think that they've risen dramatically in the last 6 months and in a way that really wasn't predicted. The other element to that is we got pretty spoiled. Rates being lower than 4% for long periods of time, which we saw in 2020, 2021, a good portion of 2022. That's not the norm. It's not normal to see rates. It wasn't that long ago that I was closing more homes at 2.75 or 3%. Those are dramatically low rates when you look at the historic history of where rates have been. So I do think that we've probably capped out where we're going to be. I don't think that we'll see a decrease back down to that necessarily 3% or 2.5% even. But I do think that we'll start to see a leveling off. The first part of your question, though, it's a big change. Homeowners are paying dramatically more just based on interest rates. What I'm having to have a conversation, especially with a lot of first-time home buyers about, is if they got approved with a rate at 3.5%, 4%, I'm having to say to them, you really need to speak to the lender again before we go ahead and write an offer, because rates have risen so much that it's actually priced some first-time home buyers and some just in general buyers completely out of the price point they were looking. So they're having to just adjust the price point altogether.
And I want to ask you about the inventory picture, because obviously if you're a homeowner and you're seeing where these mortgage rates are headed, you want to sort of sit tight, enjoy your equity, or perhaps, wait till the market's frothy again. What is the expectations for inventory given the slow pace and the lack of confidence we've been seeing from home builders?
Yeah, I actually think that's had a lot to do with the slowdown. It's less about rates and more about where a lot of sellers are. We had insanely low inventory, especially in Raleigh, for years due to the feeding frenzy that these low rates were causing. People were saying, I'm not going to move because I don't know if I can compete in this craziness that the market is. Now you're seeing people saying rates have gone so high, I'm locked in at 3.5% or 4%. Why would I go out and upsize or downsize and be in a mortgage that's going to be more expensive at that rate? So I think you're seeing a lot of sellers stay put. But that said, real estate is one of those basic human needs that is always going to function. So even in, the recession of 2009, you saw people buying and selling homes. It still happens. We're still seeing need-based moves. We're still seeing people out there saying, hey, now that there's a little fewer buyers out there, maybe I can actually compete. Maybe I'm up against less competition. So there's some really good opportunities if you can find the right mortgage rate. The other element to that I think is really important is we're so used to saying, okay, I'm closing on this house, I've gotten my mortgage, and now I can forget about mortgage rates until I'm ready to buy again. That's not what we're advising anybody to do now. Instead, I'm saying, go ahead, find the lowest rate that you can, but once you've bought, keep your eye on rates. When you see them start to decrease, look at refinancing and save yourself some money there. Just because you buy at the rate at a current rate right now doesn't mean that that's the rate that you have to stay at throughout the course of you owning that home.
Refis have all but disappeared at the moment. Alyssa Hellman, nice to see you. Thanks so much.